You know that financial playbook we're all taught. Buy a house, invest in the stock market, build up that retirement fund. But what if that whole playbook is just wrong? Today, we're going to dive deep into Robert Kiyosaki's really controversial warning about something he calls fake assets and why he believes our entire financial system is teetering on the edge of a massive breakdown. And this quote? This really gets to the heart of it. Kiyosaki is basically arguing that a huge chunk of the wealth people think they have, in stocks, bonds, even their 401ks, isn't actually real. He says it's just a paper-thin illusion, and we're all about to find out just how fragile that illusion truly is. Okay, so to really understand his argument, we first have to get our heads around this key concept he came up with. He calls them fake assets. So what on earth does he mean by that? So, what is a fake asset? Well, it's not something that's totally worthless. Instead, think of it as an asset whose value has been artificially pumped up. Its price isn't really connected to real economic growth. Instead, it's driven by massive amounts of money printing and, well, just the collective belief or speculation that its value is just going to keep going up and up. And here's the kicker. According to Kiyosaki, these so-called fake assets are the exact things we're all told to invest in our whole lives. We're talking stocks, bonds, mutual funds, and yeah, even our precious 401ks. And sure, when the market hits record highs, our account balances look amazing. But he warns that this is all just one giant bubble, fueled by printed money that could pop the second people start to lose confidence. So if it is a bubble, what could possibly be the pin that bursts it? Well, Kiyosaki points to one very specific thing, a huge demographic shift that's not some future prediction, it's already happening. Okay, this timeline right here shows the whole problem in a nutshell. You have the giant baby boomer generation born right after World War II. They spent their entire working lives putting money into the system. But now, well, they're retiring. And that means they're about to switch from putting money in to pulling money out so they can actually live on it. And they're all going to start doing it at basically the same time. And that right there creates this incredibly dangerous imbalance. It's like a scale. On one side, you have this flood of money being pulled out of the market by retirees. And on the other side, you have younger generations who, let's be honest, are often buried in debt and have way less money to invest to keep the market propped up. And what happens when you have way more sellers than buyers? Prices really only have one direction to go: down. Kiyosaki calls this whole situation the Endgame, and he is absolutely unflinching about this. He believes this can only end in one of two catastrophic ways. So scenario one, we could see a massive market crash, like a new Great Depression. Stocks just plummet, businesses start failing left and right, and those retirement accounts get totally wiped out. Or scenario two, governments try to stop the crash by printing trillions and trillions of dollars. But that leads to hyperinflation. Your cash becomes basically worthless, and your savings get obliterated by prices for everything just skyrocketing. In Kiyosaki's world, it's a choice between two very different types of financial ruin. But, and this is a big but, here is where the whole story pivots. Kiyosaki is famous for saying that market crashes are when the next generation of millionaires get made. He doesn't just see a crisis as a danger, he sees it as a massive opportunity for anyone who's actually prepared. And he's not just talking theory here, he speaks from experience. Remember the 2008 financial crisis, when the real estate market was in a total freefall and everybody was panicking? He didn't run away. Nope, he ran straight toward the fire. He borrowed a mind-blowing $300 million. Just let that number sink in. At a time when banks weren't lending a dime and everyone was desperate to get out of the market, he went all in. He borrowed this insane amount of money to scoop up distressed real estate at rock-bottom prices. It was the definition of a counterintuitive move. And this quote explains his logic perfectly. When everyone else is terrified and desperate to sell just to get some cash, that's when you have all the leverage. He used the fear in the market to buy up valuable cash-flowing assets for pennies on the dollar, which, as you can imagine, paid off big time when the market eventually recovered. So, how does he suggest we prepare for the next potential crisis? Well, his strategy is actually pretty simple. Get out of those fake paper assets and get into what he calls real assets. His playbook is all about assets like gold, silver, real estate that actually generates income, and even Bitcoin. So why these things? Because they're finite. Governments can't just fire up a printer and create more of them. They exist outside of the traditional banking system, which, in his view, makes them like a fortress against both market crashes and out-of-control inflation. And this quote just makes his strategy crystal clear. For him, holding a physical silver coin, something tangible, something you can feel in your hand, is infinitely better than owning some digital line on a brokerage statement. And out of all the real assets, he thinks silver is one of the most undervalued opportunities right now. In fact, he's actually predicted that silver could see returns of 500%. And his reasoning for that is basically twofold. First, there's a rising industrial demand for it in all kinds of new technologies. And second, there's a growing demand from investors who are just looking for a safe place to put their money to protect it from all the market turmoil. But really, beyond any one specific investment, whether it's silver or anything else, Kiyosaki's most important message is actually this. See, at the end of the day, this isn't about blindly following his advice. His real goal is to get you to question the conventional wisdom and to kickstart your own financial education. Your decisions should always come from your own research and your own understanding, not from him or any other guru. And that brings us right to our final question, something for you to think about. After hearing this perspective, what do you consider a real asset? What does financial security actually look like in a world where the very definition of wealth is being challenged? The answer to that starts with your own research.